My fellow traders, my brothers and sisters, my team, my tribe, my friends, the people with FX printed on their genes, on their DNA. How are you doing, everybody? How is everybody? Let me know. This is me, your host, Munther Marji, with FX Educast and QTime FX. And we are meeting for the last time this week, of course. It's Friday, so we are trying to end this week, this beautiful week, in the same beautiful manner that we started it. On Monday, we had a big day of profit. Now it's Friday, we want to do the same. So we go to our weekends, enjoying every minute of it and feeling that we have done enough this week to give ourselves permission to have a crazy, enjoyable weekend. So first of all, what I want to know is, how are you guys? How's everybody? I want to welcome everybody who's watching. Thank you very much for being here. And first thing I need to do is to update the chat so I can see what you guys are doing, what are you talking about, and I can, of course, follow what you're talking about. I can respond to it. Let me get my charts. How's everybody? I hope you guys are doing great. I really do. I want you to be ready for our last attempt to make profit this week. And of course, today, guys, we are going to do the same as we did every day this week, which is, of course, in addition to talking about the best opportunities in the market, we are going to talk about a trading strategy that can help you in your own trading. As I said before, I'm not only giving you a fish, I'm teaching you how to fish for yourself. So this was the theme for this week, and I hope you find it enjoyable. Of course, I'm going to be splitting what I want to be talking about in this strategy section into little sections every hour, so you guys don't get bored from talking all the time about a strategy while the market is going up and down in front of your eyes, and you are eager to know what do we think about the market. So guys, let's take a look. Let's see where the market is today. And as you can see, guys, not a lot of movement, especially on the euro. On the pound, we dropped just a little bit, not very much. We dropped below 29 for a while yesterday, but it was short-lived, and we are back above 29. So not a lot of movement here as well. The yen, although I'm waiting for a huge move on the yen, it's currently very boring. I don't know why it is stopping here. I want some action because I really believe that this thing can really move. But what dropped yesterday was gold against our expectations. We were trading in the 70s, 72, I think, when we started talking about it yesterday, and now we are around 66. So that's some kind of drop. Maybe we are trading now around 60 pips below what we were trading 24 hours ago. So let's start, of course, with the euro. I don't know, there's a problem with my chart today. Very timely. It just started just a little bit while I was preparing for the webinar. So I'm going to try to get that done. And that, of course, is going to give me the chance to welcome you guys. And of course, I'm going to talk again about who is the sponsor of this webinar. We are very proud, guys, to have QTime FX as our sponsor. This live stream is sponsored by QTime FX, your Forex broker and our favorite Forex broker in the whole world. QTimeFX is offering you to trade with fantastic spreads, beginning with 0.4 of a pip for the euro dollar and the dollar yen. And that is unbelievable, guys. That's the kind of spread that you really, really want to enjoy, want to be trading with. And that's why they got the award for the lowest forex spread broker of 2018 by ACIFMA. And that was great. Of course, they deserve it. And I really hope they get it every year, this award, because QTimeFX is the kind of broker who's offering you very, very attractive spreads with the bonus of not charging you any commission for that. So guys, we are offering you these spreads, but we are not punishing you, allow me to use this term, with commission. We have the client funds segregated in UOB, which is ranked in this 22nd place in the World Bank ranking. That is very, very good, very admirable. And you can, of course, add on top of that, that opening your account with us leaves you with $500 of free bonus. $500, guys, of free bonus. And that is really, really something that you can enjoy, because $500 of money that went to your pocket only because you opened your account with us, only because you picked QTimeFX to be your broker. We are giving you this as a thank you, guys. But of course, to get the promotional benefit, you must contact us at FX_Educast via Telegram, and we will be, guys, very happy to help you with any questions you may have, or with, of course, the account opening process. Anything you have in mind, guys, we are here to help. So I really hope that you will contact us, because a very friendly, very professional team is waiting there to help you. So with this, guys, I'm going to hit the charts if they are working, because I don't know what's wrong with TradingView this moment. I'm having a little bit of problem with my chart. It's not loading, and it's very strange. So what I'm gonna do right now, because the chart is not loading, what I'm gonna do, guys, is this. I have a solution for this. You know me, I always have solutions for anything, and I always believe in moving forward no matter what obstacles you have in your way. So what I'm going to do right now, because the chart is not loading for some reason, I don't know, maybe this is a temporary issue, maybe it's going to be okay in the next few minutes. So I'm going to use this time to start talking about strategy. So instead of starting with market analysis, we are going to talk about the strategy now, guys. Okay, and today's strategy is this. Trading techniques with FX Educast again with you guys. We have done this in the past. We have talked about a lot of trading techniques that I really hope you found not only enjoyable but helpful in your trading. Of course, I want you to, the bottom line of using these techniques is to spot the best opportunities in the market, of course, to help you get to the right entry and exit points in the market, or at least to get in the right direction, very close to the best time of getting in, and to achieve some profit. So today, what we are going to talk about is the RSI mean reversion technique. This is one of my top strategies that I use. Previously this week, we talked about the moving average strategy, my moving average strategy, which I believe it is really, really impressive. I also showed you how to use the retracements in your trading. Yesterday we talked about using the secondary trend as a timing tool or an entry point to go with the main trend. And now the fourth and final technique for this week that we will be talking about is the RSI mean reversion technique. Now, RSI, of course, I'm sure a lot of you guys know it and use it, but maybe some of you are new here. We have, of course, we have beginners and we have experienced traders with us watching this stream. So for you guys with experience, of course, the information on the screen right now is well known. But for you new guys, let me give you these bits and pieces of information about the RSI. It's like an introduction. So the definition of the RSI, it is an indicator. And of course, indicators can be oscillators or trend following. And this indicator is an oscillator, which means it moves up and down, up and down. That measures the relative internal strength of a trading instrument against itself. And that's why the name is a little bit confusing. Other researchers, aside from the man who invented RSI, who is Wallace Wilder Jr., J. Wallace Wilder Jr., other researchers said you are confusing it with the name, with including relative in the name of this indicator, because it's not relative. You are talking about the strength of an instrument against itself, not relative to another instrument or sector in the market or the market as a whole. And they are right. I think they are right, but nevertheless, we don't care about the name. What I want you to know is how to use this for your trading. I don't care if they call it relative strength index or absolute strength index or no strength index. I don't care about that. So I need you guys to focus on using this indicator. Okay. So J. Wallace Wilder Jr. presented this indicator as one of 6 indicators in his groundbreaking book, New Concepts in Technical Trading Systems, which was published almost 41 years ago in 1978. He came up with 6 different indicators. Some of them became very, very popular, like RSI and SAR, the SAR system, stop and reverse, for example, among other indicators. The formula of the RSI is this: RSI equals 100 minus 100 divided by 1 plus relative strength, where relative strength is calculated as follows. It is the average of the up closing prices of n periods divided by the average of the down closing prices of n periods. So what he's trying to measure here is how the strong closings are relative to the weak closings within a certain period of time. The n, of course, I'm going to show you in a little bit. The n is 14 according to him. Of course, this is a default value. It does not mean it has to be the only value. There's a difference between default and only. For Mr. Wilder, he used 14 and he said that this is the default value. But other researchers, of course, tried other numbers. You know us. We are traders, we are researchers, we want to understand the market. That's why we are always playing with numbers. Guys, whenever anybody tells us that this is the right number to use for this indicator, we say, okay, yes. And the minute they turn away, we start using other numbers, experimenting with other numbers, increasing them or lowering them until we get the number that we feel best about. And this at first it may not make a lot of sense, but actually a lot of the researchers, a lot of the authors are saying this about indicators. They are personal. So you need to try with different numbers until you feel that you yourself understand these indicators, that you yourself feel that they are helping you understand the market. So the number may be different from one trader to another. 14 is the default. You want to go with the default. That's easy. That's the easiest thing to do. But you can also use other numbers. For me, myself, I use 11, not 14. And I'm not going to waste a lot of time discussing why 11, because there's a reason, of course, for the 11, not the 14. I have an objection for using 14. I believe that the reason Mr. Wilder gave for using 14 is problematic, and there's an error in what he said, but I'm going to keep that to myself. I'm not going to waste time because we still have a market to follow after talking about this strategy. So let's go ahead immediately to the calculations. First of all, this indicator or oscillator, it moves between 0 and 100. And you can also call them 0%, 100%. So you can never see the RSI at 101, for example, or -2. That can never, ever happen. Now, the end periods, as said before, the default is 14. And something that I really, really recommend is that to use area borders that are of the same distance from the extremes. What do I mean by that? I'm going to show you right now. This indicator is used in different ways. One of the most used and important ways to use it, and it's a way that almost everybody uses, is to spot overbought and oversold conditions in the market. And for that, we need to identify the levels that, if crossed by the RSI, means that this is an overbought situation in the market, or this is an oversold situation in the market. So again, back to Mr. Wilder himself, he said that above 70, when this indicator reaches above 70, that means the market is overbought. And when it gets below 30, that means it is oversold. And of course, guys, why are we talking about overbought and oversold? Because when the market is overbought, it is likely to start falling. When the market is oversold, it is likely to start rising. But there's a misconception here, and that is a lot of traders believe that once we are overbought, the market should immediately start falling. Once we are oversold, the market should immediately start rising. That is completely wrong, guys. And that is the reason for a large number of losses that traders have to suffer every day. Whenever they see RSI below 30, they rush and buy. No. That is a huge mistake. I'm going to show you the right way to use the RSI today. Of course, we have many ways to use RSI. I'm going to focus on one of them. How, after reaching overbought or oversold, how the RSI is going to go back to the, let's call them the normal levels that are not overbought, not oversold, between 70 and 30, or the equilibrium level in the middle there at 50. So he said above 70, it is overbought. Below 30, it is oversold. But other researchers used other numbers. One of them is my favorite author, Martin J. Pring. I love that man. And he talked about this in details in his book, Technical Analysis Explained. He said that we can use other numbers depending on the time frame that we are using. And he talked about long-term RSI, short-term RSI. He did not he does not believe, that we should use the same number all the time. It's different. It depends on the time frame, on the analysis that we are trying to get, short-term or long-term. So he said we can use 80-20 and 65-35. The methods that we can use RSI in is, of course, the first one is the most common, using it to spot overbought and oversold conditions in the market. Another method that a lot of people use is the direction of the RSI. Just because the RSI is moving to the upside, that means the market is trying to recover, trying to go higher. Just because the RSI is moving to the downside, that is a sign of weakness in the market. But of course, when you say a sign, that does not mean we can use this specific piece of information as basis for a trading decision. It helps us understand what's going on in the market. But just because of a direction, we get in the market in the direction of the RSI, I really believe that you can use this as help, not as a decision-making tool. The 50% level, a lot of people believe that when we reach the 50% level, if we fail to cross it, up or down, of course, then that indicates a reversal in the market, because sometimes we are overbought, we drop to the 50, and the price drops with the RSI towards the 50, and then the RSI turns around the 50, maybe 48, 51, something like that, and starts rising again, and the market follows that direction. RSI trend lines, that is also something, this is one of the best things that RSI can offer. You can draw our trend lines on RSI in the same way that you draw them on the price, and once they are broken, the market moves in the direction of the break. I have seen this with my own eyes many times, and I believe this is to be one of the best uses of RSI. And of course, we have the very magical divergence, and I'm going to explain that divergence on the chart with an example. But before that, I'm going to say hi to everybody. Blaine, you are always here first, buddy. Of course you are, because you are the one looking to make profit in the market. Hey, Blaine, how you doing, buddy? Heather. Hi, Heather. Michael, hola. How you doing, Michael? This is maybe one of 2 or 3 Spanish words that I know. So, hola back to you. This is all I can say. Nick does not like the RSI. Why, man? Why? You know what I call it in my training courses? I call it the king of indicators. If you know how to use this thing, you will stop looking at the other indicators. I'm serious. I know a lot of people don't believe so. Maybe MACD, stochastics, maybe they have a stronger following. But to me, RSI is the king of indicators. And of course, the emperor of indicators is moving average. This is what I really believe. This is my own experience after 19 years of trading, training, giving recommendations, issuing technical analysis reports, and so on. Blaine, my buddy. Blaine is making a lot of profit this week because of the recommendations we are giving. Thank you very much for that feedback, buddy. That is a very good profit. It is blessing, and I'm very happy about this week. I'm very happy about last week as well. This week we are doing a little bit better, and I really hope that today we're going to add a little bit to that number. So if we get 50, 60, 70 pips today, I'm going to be a very happy man. I don't need to get as high as Monday when we made 189 pips in one day. No. Today, it's the last day of the week. If by 10 a.m. Eastern or 11 a.m. Eastern, when I start wrapping things up and preparing for my weekend, if by then we're making 60, 70 pips, I would be very happy. Even 50, I would be very happy with that. So stay tuned, because we have the goods. I'm going to give you very good recommendations today. Well, quickly before we move to the market, and I really hope that the issue with the chart is now okay. What I want to show you is how to use RSI quickly. Of course, we're not going to talk in details because this is not an RSI webinar. It's just on the side. I'm going to show you what happens when the price tops inside overbought and oversold. This is the overbought oversold method of using it. Once we are in the overbought area, start preparing for a drop. And as you can see here, we had that drop. Of course, we cannot guess in advance the size of the drop because this is an indicator. It does not come with a target. So when we are overbought and we start falling, the RSI start falling, that means there is going to be a drop. But will it be this size or this size? Honestly, we cannot tell in advance. This may be the biggest weakness in RSI. So you know the direction, but you don't know how much that direction is going to last. But of course, as technical analysts, we have many tools to use to try and identify a target. Of course, retracement levels, moving averages, support and resistance, previous daily highs and lows, trend lines, channels, all of that can be used in order to identify if the drop from an overbought situation like here is going to be this size or this size. Now, again, after trading here in the overbought area for a little while, we dropped down to the oversold area and we got in here, around here, and we continued to fall until finally the RSI started recovering and the price started recovering with it. What I want you to see here is that this is an explanation of the misconception that a lot of people unfortunately have. They believe that the minute we get in the overbought area, that means that's it, sell. But look what happened here. We got in the overbought area. We got just a little bit of a pause here, not a real drop, and then back in the overbought area again and again, guys, a pause, and again overbought, overbought, overbought. Here the price was rising in spite of being overbought. And finally, when the price started departing from the overbought area, we finally saw some movement to the downside. So just because we got in the overbought or oversold area does not mean you have to jump in immediately and look for a reversal. That does not happen always. Sometimes, of course, it does. Sometimes, like here. Look at this. We got to the overbought immediately. Boom. Price rising, overbought on the RSI. Now the RSI started falling, the price boom, 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 immediately. And again, here we got into the oversold and then boom, again here, overbought and a drop. Maybe, of course, it's not as huge as this one, but it's still a drop that can make you some profit. And again here, boom, unbelievable here with the doji, and then the price collapsed. So this is one of the ways of using it. Another way is the direction. Just because the RSI is rising, it means the price will be expected to do the same as well. So rising here, rising here, rising here, and rising here, falling here, falling here. And as you can see on the chart, most of the time, in the vast majority of the time, RSI and the price move in the same direction. The 50% level. This is, of course, another one of the methods that we listed earlier. When the price changes direction very close to the 50% level, that means that the market's going to move in the direction after touching the 50%. So we were rising here, we touched the 50%, we started falling, and the market started falling as well. Again here, we are rising, we touched 50, we did fall, and we did fall here just a little bit, not a lot. This can happen, of course. It's not always magical like this one, for example. This is unbelievable magic, and this one is very, very powerful. This one is amazing here, but it's not always like this, guys. Sometimes you get only just a little bit of a movement, not a very strong movement. And again here, as you can see, guys, we were rising. The RSI was rising. Both of them are moving in the same direction, which is the way it should be, until some weakness appeared in the market. The RSI dropped towards the 50. It almost touched the 50 exactly, and then changed direction. And as you can see, after that, the price and the market changed direction and moved to the upside. Trend lines. One of my best favorite ways to use RSI is trend lines. You can draw trend lines, and when they are broken, go in the direction of the break. So the price was falling here. The RSI was falling here until we got to a breaking point. The RSI broke above the falling trend line and started rising, and of course this indicates that the market is going to rise. And look at this unbelievable move to the upside. Again here we do have a falling trend line, a break here above the falling trend line, and boom, boom, boom to the upside. Again here a rising trend line. Now things have changed, and we broke below the rising trend line, and look at this beautiful baby. Divergence is one, of course, of the things that we consider to be magical. A lot of traders and analysts love their divergence. Divergence happens, of course, I have been saying this, that RSI and the price should move in the same direction, but sometimes that does not happen. And what do I mean? Let me explain. Here, as you can see, guys, we topped here, the price topped here, and the RSI topped here. Again, a lower high on the price, a lower high on the RSI, falling sharp, a bottom here, a bottom here. Everything looks perfect in this area until we started rising together, of course. 1, 2, 3, as you can see, 1, 2, 3. Then we drop. Now, the divergence happens at this drop. The RSI does not reach a new low while the price itself reaches a new low. So if we want to draw a trend line for the most recent bottoms here, the trend line on the price itself is pointing to the downside while the trend line on the RSI is pointing to the upside. This is divergence. After divergence, of course, the price will be expected to move higher in this situation because it's a bullish divergence. If it was, of course, tops and the price is reaching higher tops, but the RSI is not reaching higher tops, that is an indication of weakness, like it is here in this example. This is the bearish divergence. Both of them are rising. We reach a top here on the moving on the RSI and the price. We drop a little bit on both of them. We try to recover again. The recovery attempt in the price reaches a new high above the previous high, while the top on the RSI is below the previous top. So that's why we have a divergence. The RSI, the trend line that we can draw on the RSI at these tops is pointing to the downside, while on the price is pointing to the upside, and boom, down, 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 down. That's what happens after a bearish divergence. Now, as I told you before, we have a misconception. I want to make that clear. Just because we get into one of these areas overbought or oversold does not mean we need to jump in looking for a reversal. And this is an excellent example. Look at this, guys. After a significant drop here, we finally traded inside the oversold area. And if you bought here looking for a bottom, you would be in for a surprise, because the RSI moved very, very slowly, maybe in a horizontal way, inside the oversold area for a while the price itself was digging deeper and deeper and deeper, as you can see, until finally it tried to recover here and tried to leave the oversold areas and the areas below 50, and the price finally responded. Okay, guys, so with this what I want to do right now is I want to obviously, guys, unfortunately, there's a problem with tradingview.com, the chart that I use for analysis. I really hope it is better now. I really do. It is still problematic. So what we are going to do right now is if we don't get the chart, what we are going to do is to use the chart on the, of course, on the trading platform to complete our analysis. And it will be a little bit hard, of course, because that chart does not have all the tools that I use. So I really prefer it if my charting, no, it's not working. It's not working, unfortunately. Gonna try this. So guys, while waiting for our chart to appear, I'm going to go back to your comments. Welcome back, everybody. And as you can see, this is a big problem. Our chart is not working. Of course, it's not on our side. This problem is not on our side. It's from the source. I really hope that it will be done soon. Meanwhile, let me show you the euro here before we take our first break of the day. As you see, guys, of course, the euro has been trying to recover from recent lows after reaching 109.95, and on the way higher, this is what we really are facing right now. We are trying to overcome the 50% level, and the 50% level here is around 86 actually, because we need to calculate it from an earlier top, this top here. So I'm gonna not. Now, what I want to ask you guys is this: who here uses the MetaTrader as a platform for doing analysis, and who uses a professional analysis service? And of course, I'll be waiting for your answers. But for now, what I want you to see is that we have the 50% retracement for the micro term in the 80s, and of course we do have some resistance there, because for the past few days, actually since Monday we have been finding tops in the 80s. Okay, so look at this one here. 80s or very early in the 90s, 90, 91, 80s. Here yesterday we reached as high, I think, as 96, right? The high is 96.3. So it is very obvious, guys, that we do have some kind of resistance here, here. It is all in the 80s to early 90s, and we need to overcome this resistance in order to continue moving in the same direction, because we do expect the euro to move higher, but we are facing problems at these levels. We're not, of course, we're not very far from the 80s. We are in the 70s right now, but lately, especially since Monday, the trading has been extremely boring. As you can see, we are between 96 and 53, maybe 52, something like that. So we're talking about a whole week, guys, of trading within 40 pips. A whole week. We are still waiting for a push to the upside, and for this to happen, we really need to clear the 80s. I want to see the 80s broken. And for this drop here, let me show you. This is another indication of an uptrend. We do have a drop made of 3 pieces, 3 waves, 3 legs, A, B, C. Of course, that points to the upside, especially that it happened very, very close to the 38.2 retracement level. And then we had another surge to the upside. Of course, it was expected to reach above this high, but not only 6 or 7 pips above it, actually. I'm disappointed Because when I saw this ABC, and I talked about it yesterday, of course, in yesterday's webinar, when I saw it, I thought to myself that we are going to see a move to the upside the same size as this one, which is almost 100 pips. So I wanted to see 100 pips above 1052. I think it was, of course, it's different on the chart. It was 51. On brokers, it was around 52. And I'm still waiting for that. But the problem is the 80s are in the way. 80, 86, and 96. These are the highs that we have been seeing recently. And we want to break above them. So resistance is definitely, I'm going to keep my resistance where it was yesterday at 86. And of course, we said this yesterday, we said that, and the day before, and on Monday, we said that we have a support in the 50s, and we have another support at 1017. The 1017, guys, is the 71 point for retracement for this recovery attempt here. So even if we get to the 1017, I would still look at that as an opportunity to buy. But what I prefer to see happening right now is this. I want the price to start moving to the upside, and I want it to break above 1086. The sooner, the better. I don't want to waste the last hours of trading this week in the 70s or anything below 1086. I don't want to be spending much time here because we don't have time, guys. We don't want to be holding a long position on the euro while the market is only moving 10 or 20 pips to the upside. We want to see real action, and for that we need to break the resistance at 1086. Currently, I do have the position from yesterday, the buy position from yesterday recommendation. I'm keeping it. I did not close it because of many observations. One of them is the ABC to the downside here. Another is finding support yesterday very, very close to the previous bottom. And this is, and although the internal structure of this move it can be, of course, forced to be maybe 1, 2, 3. Yes, 3. It makes perfect sense. 1, guys, here, 2, 3, and this is 4. Of course, this is 5. Although the internal structure is a little complex, we do have an ending diagonal probability here. It's one of the patterns that can appear in wave 5, although it's not very popular. It does not appear a lot on the chart, but it does appear. So when 5 waves are overlapping, it could be an ending diagonal. And to see that this, in our count, it's the bottom of wave 4, to see it offering support here, that gives us a very good feeling. Why is that? One of the most important guidelines of Elliott wave is that corrections tend to terminate near the bottom, in this case, because we are talking about an uptrend, near the bottom of wave 4 of 1 lesser degree. This is one of the most important guidelines and the wave principle. And if we count this as 4, then this last part is 5, and then this is a correction. We can see that this is actually what is happening. A bottom of the correction here, very, very close to the bottom of wave 4. And that indicates an end to this correction. And that makes me feel very, very good about the euro. I want to see the euro now moving to the upside, breaking above 1086 and moving higher. For me, I'm not going to place any orders for today because I still have the long from yesterday. I'm not closing it. But for you guys who are flat on the euro, once we start trading above 1086, you can initiate a position. I'm going to use the order to show you, but I'm not going to place this because I already have a position on the euro. I don't want to add to that. I don't want to add to the risk. Buy stop, let's say, to me, with this, of course, this bottom here, very close to the bottom of wave 4, and both of them are very, very close to the 38.2 retracement level. For me, this is very bullish, so I'm not going to wait a long time after we start trading above 1086, 5 pips is enough. That's why I'm placing my buy recommendation for today at 1091. My stop, of course, should be below these bottoms here. We have the Fibonacci level at 51, sorry. So I'm going to place it 20 pips below that, 1031. That's 60 pips. That's very good. Now the take profit, well, you want to be looking for a modest profit, guys, or shooting for the stars. Today, it's the last day of the week. And of course, at the end of the day, if we still have open positions in the market, we need to close them. I really do not recommend you guys keeping positions over the weekend. You never know what happens in the weekend. And you remember a few weeks ago, maybe 2 months ago, 6 weeks to 8 weeks, I don't remember the exact date, when we had that attack on the oil facilities in Saudi Arabia, and we had a gap of 678 pips on oil. You never know what happens over the weekend, and you can do nothing about it. Your position is there. When the market is open, it can be brutally murdered. So don't keep positions over the weekend unless they are very, very small, or I don't know, if you really have to, then okay. But I really don't recommend you taking this habit of leaving your positions open over the weekend. Okay, guys? So we're gonna place a very good limit. I'm not gonna give you 30 and 40 like, of course, for the past previous days we have been giving a small target and a larger target. For you guys who like the smaller targets, you got your target, and for people who are aiming for more, you got your target. So for me, I'm gonna place a limit that is more than 100 pips on this one. And I remember that we do have a retracement, a short-term retracement at 1209, and I'm really interested in that level. I want to see 112 on the screen. It's been too long, and I want to see that again. So I'm keeping my fingers crossed. This is my recommendation for today. On the euro, buy at 1091, your stop is 60 pips at 1031, and your limit is 118 pips at 1209. And click place right now on your QTime FX live account. I'm not gonna add to that because, as you can see, I do have positions on the euro. I don't want to add to that. Okay, guys? So this is your recommendation for now. One recommendation for the euro on the last day of the week. I do not expect, I'm not gonna place a buy here around 1017. I don't expect that to happen. But in case you see it around 1017 without breaking 1017, going long from there could be a very good idea. Okay, for me, I have enough reasons to believe that we're not going to drop there. We are going to try and break 1086 today. And I hope we do, and I hope we trigger this long recommendation at 1091. And I really hope before the market closes later today that we reach 1209. I know it's a little bit far, especially because we are having a whole week, guys. The highest price in the week, the lowest price in the week, 40 pips between them, almost 44, I think 44 pips. That's it. So it's a very boring week. Maybe it's going to continue to be boring until the market closes later today, and that maybe will make it harder for us to reach that limit, but we are keeping the hope. And of course, at the end of the day, we will close this position no matter where the market is. Even if we are making a profit of 2 pips, we want to close this position. Don't carry it over the weekend. Okay, guys? With this, we reach our first break for the day. You have the recommendation in front of you, and for now I'm going to take a 5-minute break, and I really hope, guys, that when we get back, I'm going to get my charting website that I'm subscribed to up and running. I really hope the guys at tradingview.com will overcome this technical problem. It's not from our side, guys. It is not from our side. There's a problem with the with the website apparently, and unfortunately this problem had to happen while we are doing a live webinar. That is funny. That is funny, and we only can laugh. You know, when I see these things happening, I just smile and laugh about them and hope for the best. So I really hope that after the break, the charting software, the charting website that I use will be up and running, and we can use it for our analysis for the second hour. For now, as I said, guys, this is our recommendation. Screenshot it or copy it in any way you like, or go straight to your QTimeFX account and place your recommendation there. And before I go, of course, I'm going to remind you that this live stream is sponsored by QTimeFX, our favorite Forex broker in the whole world. QTimeFX offers you a maximum leverage of 500 to 1, and these guys won the award for the lowest Forex spread broker of 2018 by the ACIFMA. Imagine yourself, guys, trading with 0.4 of a pip on the euro and on the yen, and with zero commission. Fantastic conditions to trade with. Client funds are segregated in UOB, which is ranked 22nd place in the world ranking, bank ranking. Come open your account with us with a deposit of $150 or more and get your bonus, guys. Free withdrawable real money bonus. Not trading credit. No. Real green money, guys. So when you deposit $300, you get $500 in bonus, or you can also deposit a very modest amount like $150 and get $250 in bonus. You can withdraw equity after trading after trading a number of lots that is equal to $1.5 per lot, and then you can withdraw the bonus when you cover it with traded lots. But there's one very important thing, guys. To get the promotional benefits, you must contact FX_Edcast via Telegram, and when you do, you are going to find a very helpful, very friendly team that is there to help you, that is there to answer all of your questions, and of course with a big smile on our faces. So don't hesitate, contact FX_Edcast via Telegram right now. Let's open this real account for you. Or even if you have any question at all, please contact us and we will be happy to answer. With this, guys, we're going to take our first break of the day, and I hope to be back after 5 or 6 minutes with our charts up and running so we can continue what we started doing an hour ago. Love you all, guys. Thank you very much for being here. I'm going to take a look at the comments, of course, after the break and talk to each and every one of you guys. So see you in 5. Okay, guys, we are back, and we are back with some good news. Finally, guys, I managed to activate my chart. I'm sorry, it was not the website itself, it was my crazy browser. It was blocking several websites. I don't know why, but I refreshed it. I deleted the data and started over again, and everything is now working. So, welcome back. As you can see, of course, we are going to talk about gold. And before that, let me check your comments. Hi, James. Hi, buddy. How are you doing today? What is TEEP? What are you talking about? Which currency, buddy? Which instrument? Please let me know. Gabrielle is saying hi. How are you doing, Gabrielle? Gold stop loss was hit last night. Exactly. That was right. Unfortunately, and the market traded only 10, 15 pips below that stop. And now we are recovering. We are currently up almost 40 pips from last night low. And I think this recovery could go on and on. So that was a little bit hurtful because I still believe that gold can go up, but we were stopped out yesterday. Praying for the recovery of our trades. Well, it's the first stop in 2 weeks. That's okay, buddy. That's a part of the game. Not one stop this week or the previous week, but this one, the long gold yesterday, and maybe we got in a little bit earlier than we should. I think that was the case when we saw that the price is trying to push above 74. We said, let's go, but it did not push more than a few pips above our resistance yesterday, and then started dropping. Maybe if we waited a little bit above that resistance, we would have saved ourselves from that stop loss. But as I said, buddy, as I said, my friends, this is the first stop in 2 weeks. And of course, that sometimes happens, and it's okay. We are still doing very good for the week. We are still in profit overall, and with a little bit of a push today, it's going to be a wonderful profit. Mona Lisa, welcome back. Welcome back. You don't understand what exactly, and I will be here to answer, of course. Ghulam Farid, morning, sir. Morning back to you. You are obviously in a place where now it is morning, just like me. It's 9:18 here. I know some of you guys are approaching the end of their day, in the evening, afternoon, wherever you are. Have a great time and great trading. Please check the pound against the New Zealand dollar. I promise you I will. But first we're going to talk about gold. And after that, immediately, I'm going to respond to your request, buddy. So gold, guys. Of course, we have been very bullish on gold. We have many reasons on the chart to believe that this market is going higher like crazy. And we're talking about something that is at least 1,000 pips. Why is that? Because we do have a complex corrective pattern here for the drop from 1557, which seems to be terminated very, very close to the 38.2 retracement level. And of course, when we have that kind of behavior, a corrective pattern terminating very close to a retracement level, the odds of the market moving beyond the top from which this correction started are very, very good. This correction started in September, early in September at 1557. We dropped here in an ABC, wave X, then another ABC. And the whole thing, this is very important, guys, terminated very, very close to 38.2 retracement level. And then we started rising again. We started recovering again. As you can see, guys, this is the first ABC, the first three. This is a complex pattern. We can count this as a triangle, of course we can, as an X-wave triangle, or we can count it as an A, B, C, a 3. In both cases, two counts make perfect sense. One of them is this one. Let me show you. This is an alternate count, in my opinion, and we do have although the size of wave E here is larger, in my own opinion, it's larger than it should be. We can also count it like this. Still, it is a possibility, but even though if we do not want to count this as a 5-wave corrective sequence in wave X, of course, we can forget about that. We can adjust this to be like this. Wave X here, A, B, C. In both cases, the understanding is the same. We are going up like this. And I'm sorry that we did not use this to our advantage yesterday, but we are going to try and do this today. So, of course, two corrective patterns to the downside, a doji, a daily doji. On the daily chart, of course, it means much more than on the 5-minute or 15-minute chart. And of course, bottoming very, very close to a key Fibonacci level. Everything is pointing to the upside. But even when the market is expected to move to the upside, of course, guys, it does not happen in straight lines. So that's why we had to suffer this yesterday. Unfortunately, we did. And now we are back on track. And we are trying to recover. So we're going to try and identify where is the resistance that, if broken, will give us an indication that the market is going to continue moving to the upside, and of course that will justify a long position. I'm going to take a look at the hourly chart. It is promising. RSI is moving to the upside. Stochastics is moving to the upside. The MACD is about to cross. Everything looks good, but we do have a falling trend line and moving averages here. There's something I want to show you on the 4-hour chart before we talk about this trend line. And that is this, guys. This cross on the stochastics. So we already have a cross on the stochastics. So stochastics is saying, get in, guys, buy gold, and let's take this up. This is from yesterday. I'm going to delete it so you don't get confused. Now, after showing you this very important observation on the 4-hour chart, of course, it's also supported by a change in direction of the RSI from down to up. The hourly chart and try and focus on what? On the trend line that is creating the resistance. The resistance, and Gulam, my buddy, I'm going to respond to your request immediately after gold. So where is the resistance? I'm going to hide these things. We are waiting for a cross here. Maybe it will happen at the close of this hour. We'll check back and see. But where is the resistance, guys? The resistance is, of course, provided by this rising trend line and the moving average band. As you can see, the price is trying to touch the bottom of the moving average band, and we want to break this moving average band. It is falling. The trend line is falling. I expect them to touch in the next few hours, and that's why I'm going to use the top of this moving average band at 69.70 as our resistance. Of course, resistance can stretch up to 70.6, and these 9 pips, I really believe we have resistance. So the first thing I want to leave on the chart for you is the identification of the resistance area. 70.5, let's say, because we're actually 0.3. Okay, so this one here is resistance. Is at 1469.7 to 1470.4. In these 7 pips, the precious metal will show how strong it is. If we top around this small resistance area, then I'm sorry, gold, you're not gonna do it today. Maybe later, maybe next week, but not today. But if we break above this resistance, that would be fantastic for the bulls. What about the support? Let's look for support, but at first I want to leave this in black. Recommendations are blue and red, depending on the direction, but statements like this about resistance support are black. Okay, guys, support. Let's look for a support. We were counting on this support yesterday because it's a rising trend line, and unfortunately it was penetrated. So I'm going to delete this trend line. I'm going to try another trend line that has not been penetrated so far. Maybe starting at this point, maybe, we'll see. How about that, guys? How about that? I wish we saw this trend line yesterday. But it's a market, of course. These things happen. So if we connect the daily low from November 11th with the daily low from November 12th and the daily low from November 18th, we see that yesterday low was almost exactly a touch at this rising trend line. And that indicates that we can use this trend line as support. As you can see, this trend line is currently running extremely close to the Asian session low, which is 63.2. It is 63.2, right? So support is at 63.2. Now I want to go back and fine-tune the resistance here. I'm going to use the 15-minute chart and try and look for where this trend line is. The moving average is already broken. If we have tops here, honestly, this one here is looking very, very attractive. It is 69.63, which is, of course, very close to 69.7. So I'm going to change that to 69.6. And I'm going to use this as my resistance for the day. I'm going to, of course, the other part of this resistance, only 7 pips above that. But I'm going to count on these two as my support and resistance levels. And immediately, guys, let's start building trading strategy. If I break the resistance, I want to be long. If I break the support, I want to be short. So buy, let's say 10 pips above the resistance. I'm just thinking out loud. Of course, I'm going to see the size of our stop losses, and then maybe we can play with the distance away from these resistance support levels, maybe 10, maybe 20 pips. Well, it will depend on what we are going to calculate right now. So 70.6, I think that makes absolute perfect sense with a stop on 462.2. How about that? This is 84 pips. I'm gonna take this down just a notch, because of course we are favoring the upside, so we don't want to place our stop immediately below this trend line. A little bit further would be good. And of course with this 69.6, let's say, if we start trading there, how about we can use this with a little bit of more of a stop loss to the downside below the rising trend line. I know this is not very attractive to you guys because we are buying pips above the resistance, but the bullish possibilities are there. They are strong and we believe in them. That's why this is what we are going to do here. 94 pips. Yeah, that is good enough for me. Yes. Okay, so let's start thinking about the targets. It may sound to you like an early entry, but believe me, I have enough reason to do it at 69.6 instead of 70.6. I want to be in as early as possible. because there is a lot on the chart that indicates a movement to the upside, and I believe in these observations. So initial target, of course, is going to be modest. I don't want to aim for the skies here and for the stars. How about this high? It's 74.5. Too close. 49 pips. Let's make them 50. Let's make them 50, okay? But for the second target, I want something really, really much more exciting. We have been talking about 1495.9 for many days right now, guys. And we are still going to try and aim for that very attractive target. So I'm going to use this, guys, today, not that 74.6. I'm going to place my limit at 95.9. This is the first recommendation. Now, of course, if we get to levels that are below this rising trend line here, a short position will become 100% justified. At the moment, it is not. But if we get there, it will become justified. That's why we will have a sell at 60.2 with a stop that is at, of course, it has to be at 69.6. And now for the limits, of course, target 1 is going to be modest. Target 2 is going to be more ambitious. So for target 1, I want something around 55. Can we find that? We do have this bottom. The previous touch on this trend line is, of course, the bottom we bought at on Monday at 56.24. How about 10 pips below that? 65.2. Sorry, 55.2. Exactly 50 pips. That's very good. But the second target, it has to be 1446.1. The Fibonacci level that saved us earlier. Here, this is it. This is our second target. And with this, of course, we are now prepared to take advantage of gold. Okay, so I'm going to go to my QTime FX, of course, my account with QTime FX, and I'm going to place these orders. It's going to be a buy stop at 1469.6. Our stop is 1460.2, and our limit is going to be 1495.9. Okay, guys, the second target, not the first target. And place. Okay, as you can see, buy stop at 1469.6, stop at 60.2, and the limit is way high, more than 250 pips above current levels. It's going to be 1495.9. I really hope we at least get close to this one later today. Okay, now what about the stop? Sorry, the sell, not the stop. So the sell is going to be, of course, exactly the opposite to that. Sell at 60.2, stop 69.6, and a limit. I'm going to use the first limit for the sell because I really prefer the upside on gold. Okay, guys, and place. And with this, of course, now we are ready to take advantage of gold. If it breaks this trend line, we are in with a long position. If it breaks this trend line, we are in with a short position. And of course, during the next few hours, this trend line is going to drop a little bit, of course, towards, it's not hours actually, this is a 15-minute chart, so we need only an hour or two for this trend line to be very close to these tops here, where, of course, once we start trading pips above these tops here, I want to be in. Okay, guys, and that's why we placed our buy at 69.6. Alrighty, with this, we are now I'm gonna focus on the chart so you see the recommendations in a very, very clear way. And with this, guys, we are done with gold today. Then what I'm gonna do now is, because you guys are my favorite people in the whole world, you are my tribe, my friends, my fellow traders, because of that and because of how much I really appreciate your presence here and you being here, what I'm going to do is, of course, I'm going to answer the request by Ghulam Farid to analyze the pound against the New Zealand dollar, something that I don't remember when was the last time I took a look at this chart, but I'm gonna answer this request. And sorry, yes, it's a New Zealand dollar. So let's take a look at this thing. Ghulam, do you care to tell me what's your trade? I'm not going to take a look at the answer until I finish looking at the chart, so I don't get biases from your position. Okay, so as you can see, guys, we started with the daily, and I'm going to use some indicators. Let's go to the daily first. All right. As you can see, guys, we are in an uptrend, very obvious uptrend, and the price has been trading above the moving average for a very long time, finding support inside the moving average band or very close to it. And as you can see, also, we do have a massive trend line that is very, very close to the bottom of the moving average area. The bottom of the moving average area is at 99.76 here, and that is expected to be a very, very important support here, of course. Obviously, we are a bit far from these levels at the moment, more than 150 pips above it. So let's switch to the 4-hour chart and see if we have important levels closer. Recently, we have lost the direction. As you can see, guys, although on the daily chart the direction is extremely clear, on the 4-hour chart it is obvious that we are moving in a horizontal way. Okay, so in a horizontal way, we are moving up and down between these two levels here. The highest price seen recently was 203.30, and the lowest price in these areas is 99.98. So yeah, we can, of course, we can wait until these two meet, maybe early next week here. Yes, on the 26th of the month, the rising trend line and the bottom of this horizontal area are going to be touching. And that is, of course, an indication that the bottom of this horizontal area is very, very important. I really recommend that you focus on the support body. It's very, very important. So I'm going to leave this on the chart. I'm going to just take a look at this number here, 99.98. So support is at 99.98, obviously. And of course, as you can see, it's very, very, very close to a huge psychological level. The 2, when the pound is equal to 2 New Zealand dollars, the 2.000, of course. So it is a huge psychological level. At the same time, on the chart, we have the bottom of a range and a rising trend line that is coming very, very close to this level. So without a doubt, if I'm going to trade this pair, I'm going to keep both my eyes. Do you hear this, Ghulam? Both of my eyes on this support. This should be the support that you decide what to do with this pair, depending on what the price is doing against this support. I know we are currently almost 150 pips above it, but we can start moving towards it very soon. If we keep trading above this support, of course, you should look to buy. But if this support is broken, immediately you should, if you have long positions, get rid of them. If you are thinking of opening a short position, go ahead and do it. Of course, always use the right risk management. Always use the right risk management. So what we have here up until now is a very, very important support at 99.98. We have a resistance at this is the highest price seen here, 203.31 if you want to be exact. Resistance 203.31. As you can see, guys, there is a huge distance between the support and resistance, and of course this can happen on these pairs that are volatile or cross rates that move a lot, and that's why we are going to look for closer levels. I'm going to keep this here so you keep an eye on it, Ghulam. Write them down and remember me when you see these levels act. Inside this horizontal range, we do have a rising trend line and a falling trend line, and they will provide us with closer levels. If I calculate the retracement level for this move to the downside, I want to see two things. Where is this top and where is this trend line? So the top is obviously, oh my God, very, very, very accurate 61.8 retracement level, while the I think this thing is going to the downside. I hope that is good news for you, Ghulam. I think this is going to the downside for many reasons. First of all, we do have a top here, very, very important top. Very important top here. This is the Fibonacci 61.8. The accuracy here is unbelievable. We are talking about very, very, very little difference between the price high and the Fibonacci level itself, and from there we are falling. Of course, the fast reaction to this test is, this by itself is something that favors the downside, and of course the top here favors the downside, and the fact that we are currently trying to push below the moving average band is also something that favors the downside. So everything, I think, is pointing to weakness here. We found resistance and support levels. Sorry about this. I wanted to move this one. Yes. Resistance, we can see that, of course, 202.10. I'm going to add to that 202.10, and of course the falling trend line, which is very close to the 88.6 retracement level here at 202.71. So these are resistance levels. The support is obviously at this rising trend line, which is currently very, very close to this bottom here, which is 297. Support 297. This is closer. And then we have, of course, the 99.98. If we start to trade below this initial support here, expect a test of this support, and if this is broken, this pair could really, really crash. On the other hand, initial support is at 202.10. Obviously, we failed to break it the first time. We can still, of course, push towards it for a second time, but I don't think that is probable because of the fast reaction. You know, These fast reactions, they indicate a change in psychology in the market. When you go up fast and then you go down fast, that is when the psychology changed. And when the psychology changes, the direction, of course, changes. We were moving to the upside here. Fast change in psychology at a Fibonacci level, that you cannot argue with that. This is a weakness sign, and we expect the market first to test this support, 297. And if it survives, then you have to wait for more evidence on the direction of this thing. But if it breaks the 297, we should immediately start anticipating a test of 99.98. And there, the whole story of this pair is going to be decided. If we survive at 99.98, this thing can shoot up to the stars. And because recently we have been trading above 203, that means more than 300 pips if we get back to these tops here. But if we break 99.98, that's it. That's it. Prepare a casket for this thing, okay? Because it's going to drop like a stone. So these are the very important levels that you need to care about, buddy. And I'm going to show you, I really believe in the downside on this one. Of course, anything can happen. We can survive at 99.98 and then shoot up 300 pips to the upside. That of course, that is that won't be any kind of surprise to me. But what I really expect to happen is to break this support, and I'm not gonna presume anything. If we break, this is how I'm gonna phrase it. If we break 99.98, then buddy, you are in for a lot of profit on a short position. What kind of profit are we talking about? Let's go to the daily chart and just take a look at this. Take a look at this whole move to the upside. If we only retrace the last part, 50% of the last part, let's see where does that leaves us. Or 61.8 retracement is going to be at 97.88. So you're talking about a little bit more than 200 pips from our support. And this is, of course, if you retrace the last part. But usually, when these very important breaks happen, we're not retracing only the last part. We are retracing the whole move to the upside. And let's see where is the first. The first retracement is 38.2. This is the first one I care about, 96.88. My God, we are starting to talk about 300 pips and more, and a more likely target is the 94.20 for this drop. Unbelievable. We have a top here very close to 94.20. We have an attempt to break below it here, but it did not succeed. So this is my view. I really hope this is helpful. 201.71 in a short position. You are already in profit, buddy, right? Just a little bit of profit, and I really hope you do much more profit. But 2.5 lots, I really hope that this size is not too much for your account, because this is a huge position for you know, an individual trader. If you don't have tens of thousands in your account, I think 2.5 lots is too much. So I really hope your account size is the kind of size that can handle 2.5 lots on such a volatile instrument. I really do. And once you achieve this profit, I really hope you do. I'm going to say congratulate, and I'm going to invite you to join us at QTime FX. Get your account here, and you will get the bonus, the very attractive spreads, and of course these webinars that can help you identify the best opportunities in the market. So with this, I want to thank Ghulam for his request. The news, we do not analyze news, buddy. If there's some figures coming out on the pound later today, then you have to watch them. Maybe they usually come out at 11:30 my time. That means in less than 2 hours. But the webinar will be done by then. It ends around 30 minutes before that. And we do not anticipate or we do not predict the figures. You know, there are figures, nobody knows what they are going to say until they come out. We predict market movements. We look at the chart, we identify support and resistance levels, find strength or weakness signs, and we follow what we see on the chart, but not the news. I'm a technical trader. I'm a radical technical trader. That does not mean I'm going to go and attack fundamental traders. I'm not going to terrorize them. No. But I am a radical technical trader. I love technical analysis very much, and I use it all the time. And I don't care about the news unless it's very, very, very huge, like a central bank meeting or something like that. But not your everyday PMI and these numbers. You know, I don't follow all of these numbers. Only the real big ones: jobs report, central bank meetings, these kinds of things, you know, that they can really, really move the market. But for news figures that can move the market 20 or 30 pips, I'm not interested in these. I'm sorry to say that. You guys, I apologize for the fundamental guys who are with us today, but I don't do that. Blaine is asking, how do you set the limits? And that's a fantastic question, Blaine. That shows that you are the kind of person who wants to learn. You're not here only to get a recommendation and then go to your account and place it. You want to know the why. And the why, as the Merovingian said in the Matrix movie, if you are a movie buff, why is the source of power. When you understand the why, you feel power. Who watched that movie, guys? Who did watch? Maybe some of you are too young to remember what kind of hype this movie had when it came out. It's absolutely my favorite movie in the whole world. And that quote from the movie, why is the source of power. So you want to understand why, you want to understand things behind what we are doing. And I really, really respect that. Why did you place your limit here? I love that question. How do you specify your limits? Well, buddy, of course, I use the same exact tools that I use to specify the entry. So what I'm trying to find is important support and resistance levels. If I'm looking to buy something, I buy that if the resistance is broken to the upside. Once the resistance is broken, that encourages me to buy. How do I set my limit? The next resistance that I really care about, that I really feel that this is the resistance to watch. But there's a tricky side, of course. The tricky side is this. How can you tell which support or resistance is more important than the other? Because we always have support and resistance levels all the time. When you look to the upside, you can find a resistance every 30, 40, 25, 50 pips. You can find 10 if you want to look for support and resistance levels. You can find 10 support levels and 10 resistance levels on any given chart. Which are the most important? In my own opinion, one of the absolute most useful tools in identifying the best support and resistance levels is retracements. As you can see, we are still here on the chart. I'm using this tool, the retracements. So I told our friend Gulam, you can sell if we start trading below this trend line, and you can target this retracement level. Why? Because, of course, this is another concept that is closely related to what we are talking about, and that is technical confirmation. Technical confirmation means I need to see more than one technical tool pointing in the same direction or giving me the same idea, the same reading of the chart. Let me show you what I mean. First of all, when I calculate retracement levels for this move, I find the 50% level one of the most important retracements at 94.20. And then again, I look at the chart and I see that when the price was trying to recover, we found resistance very, very close to this one at 94.13. So we have 7 pips here. Difference between the Fibonacci level or retracement level and the actual price top. That confirms the importance of this area. So I have one tool, the retracements, telling me that 94.20 is important. And I have another tool, which is using previous tops and bottoms, daily highs, daily lows, or even session highs, session lows, intraday highs, intraday lows, pointing to the same conclusion, and that is 94.13 is important. And of course, 13 and 20 are very, very close. That leads me to the conclusion that the area between 94.13 and 94.20 is very important, and that's why I consider it my target. It's more important, for example, than this one at 96.88 because I do not have a significant top or bottom very, very close to this level, where here I do have a significant top that is extremely close to this level. That's why I favor this level to this level. Okay? And you can, of course, you can use trend lines, channels, and even moving average bands in the same way. But when there are two tools pointing in the same direction, you know that you have yourself a more important support or resistance level compared to other support and resistance levels, and you use this important support or resistance as your target. That's why my target is here for this drop. If we break, of course, below this trend line, my target is this retracement, not this retracement. I hope this answered your question, buddy. Blaine, that was a very smart question. I love that. I love questions about the market itself, not about this trade. Oh, do you think we can buy the euro here? That's a good question, of course. That's very important. But it will be useful to you only for this time. But when you ask a question that brings back knowledge to you that you can use every day in your trading, I really appreciate these questions more. So you want to know how to specify the targets. That is a very, very smart question. Thank you very much for that question. Gulam, buddy, 9,000 with 2.5 lots. That is a lot. That is a lot. Please take good care of your position, because 9,000, you should be opening a less than one lot. Okay, maybe 0.9, 0.7, something like that. 0.6, okay. And Gulam is, you want to join us? That is an honor for me, buddy. And of course, when you do, that will help these streams coming to you free of any charge, because you know why? They are coming. They are coming because QTimeFX wants you to make money. And when they see that you guys like these webinars and you open accounts coming from these webinars to the company, that of course will help these webinars go on and on every day, and I will be able to point out to you the best opportunities in the market and give you my analysis on any pair that you are interested in. Okay, buddy, welcome. You are welcome to follow us at any time, Gulam. Thank you very much for this interaction. And with this, guys, we are going to take our second break for the day. We have talked about euro, gold, and the pound New Zealand dollar. After that, we're going to talk about the yen. I love the yen. It's not creating a lot of action recently, but the potential is there. And we're going to talk about the pound itself against the dollar. That may be also important to you, Gulam, because we want to see what the pound is doing against the dollar in order to understand at a deeper level what it's going to be doing against the New Zealand dollar. After the break, this is what we are going to do. And of course, we're going to take a look at examples of the strategy that we have been talking about today, the RSI mean revergence strategy. A third hour that is filled with information that is very, very important and useful to you guys. This is what I promise you after the break. We're going to take a break of 5 minutes, and then I will be back. Before I go, I want to thank QTimeFX, our favorite broker in the whole world, for sponsoring this live stream. QTimeFX is offering you maximum leverage of 500 to 1. These guys won the award for the lowest Forex spread broker of 2018. That means, guys, nobody gives better spreads than these. Of course, that comes with zero commission. Some Some brokers give you fantastic spreads, but then they charge you commission and leave you paying a commission for having a fantastic spread. So what's the use? I do not know. Our client funds are segregated NUOB, which is ranked in the 22nd place in World Bank ranking. Open a VIP account with QTime FX with a minimum of $150 and get $500 of free bonus. Not trading credit, guys, real money, withdrawable money, bonus money that you can withdraw and spend them on anything you like. You can buy that gadget you've been looking to buy, or take the missus on a very nice weekend for a couple of days. Of course, you have to be back before Monday, because on Monday we're going to trade again. So make a deposit of $300 and get $500 in bonus, or make a deposit of $150 and get $250 in bonus. See, guys, what we are trying to do here? We are trying to make it so easy for you to get money. So previously we wanted you to deposit $300 in order to get the bonus. Now we are offering you a smaller bonus for $150 of deposit. That's nothing. So you can come up with that. Of course, you can open your account with a broker who wants you to be successful, who are giving you the best opportunities in these webinars, best trading conditions with such very tight spreads and zero commission. And of course, to get these promotional benefits, you need to contact us, FX_Educas via Telegram, and we will be very happy to help you. We'll be there to answer your questions, to help you if you need help in opening your account, or if you have any question at all about the bonus or the account in general. With this, guys, I'm going to take a short break now, 5-6 minutes, something like that, and I will be back. After the break, I promise you a lot of market action strategy and analysis. So be there after the break. See you guys in 5. Okay, guys, after this short break, let us continue what we have been doing. How's everybody? I got myself something to wear because it's getting colder here, so I went and grabbed something to put on. It is late November, so things are starting to get a little bit cold in this part of the world. During December and January, it's going to be very, very cold. But after that, starting from late February, things will come back to the really nice temperature that we enjoy. But for now, it is starting to get colder, so I got myself something to wear. And the break, guys. Okay. So guys, let us continue what we were doing. Now, we really want to jump quickly to the yen. Want to jump to the yen? Okay, guys, you know my opinion about the yen. I have been expressing this for a long time. I expect the yen to have glorious days against the dollar, which means, of course, I expect this pair to drop, not to rise. That is, of course, guys, I'm going to show you why this is going to happen. And this, of course, the reason is that we have failed to break above a very, very important resistance around 109.37. This resistance is, of course, made by the Fibonacci 109.37, and to add to its importance, we have been in the 930s before this absolute crash in the price happened, when the Fed announced their first rate cut this year, and on the last day of July. So the 109.30s is the top here. It's a Fibonacci level, and to confirm its importance, what the dollar yen did was test this area here and reaching maybe 12 pips, only 12 pips above it, before starting to drop again. That was fantastic for our point of view. Of course, I was defending this as a resistance, a very important resistance, a strong resistance that is expected to hold even before we got close to it. I was waiting for this test even when we were in the below 109, in the 108, and we did, and we failed to break it as expected. Now we're dropping as expected. My target for this drop is really, really huge. I have a lot of reasons to believe, guys, that this whole move up from this bottom here seen in August is corrective. Now, do you see what I mean here, guys? It is only corrective. The whole recovery attempt that we see here is only corrective. And when corrections end, of course, we should expect a new price extreme. In this case, the trend is to downside, correction to the upside, and new extreme means a new low below this one. And this one is 104.45. So on the long run, I really believe, guys, that we are heading to areas below 104.45. Now, unfortunately, up until now, the past few days, this whole week, the price action was extremely limited. No action to the upside or downside. As you can see, these very small candles on the daily chart indicate boredom. Now we want to see something happen here. And the thing I really, really want to see is a break below, or a cross, let me call it, a cross below the bottom of this moving average area. The bottom of this moving average area is now very, very close to yesterday low at 108.28. And as you know, of course, we talked about 108.33 as a support. For the past few days, we have been watching the support at 33, and the market is touching it. It touched it yesterday, but without breaking it. So I really want, the first thing I want to see is a break below, actually not yesterday, this was a couple of days ago. What I really want to see is a break below 108.33. We have been trying, we tried here, we failed in both cases. While the resistance is, of course, it's 109.37, but we should look for closer resistance levels because 109.37 is getting further and further away from the market. This is a resistance that I really care about, the 108.80. And what looks like a good strategy to me is to sell if we reach 108.80, 108.80, or sell if we break 108.33, let's say by 10 pips at 108.23. So in both cases, guys, what I want to do here is a short. I want to short the dollar yen. I don't want to go long unless the huge surprise happens and we break above 109.37. If we break above 109.37, a long position will be justified. But if that does not happen, I would definitely prefer to short this pair. I can short it here, very close to this trend line, or if we break this support here. So here I'm going to place a short, here I'm going to place a short. Let me give you the details. Of course, the stop here is going to be 20 pips above 109.7, and that leaves us with 109.57. Limits, I'm gonna place a small limit, of course, that indicates a modest profit. I know you guys like these small limits, so of course we have support at 108.33. That would leave us with 47 pips of profit, not bad at all. But this is going to be my first target, of course. Now, target 2 is going to be astonishing to you. It's going to astonish you, leave you in awe. And that is 104. Yeah, guys, 104. Or, of course, when I give you two recommendations in the same direction, that means you follow. Of course, you can place them both, but once one of them is triggered, we cancel the other immediately. We don't want to have too many positions in the same direction. So stop. For this one, the stop needs to be above 80. I'm going to use 20 pips above that. So stop at 109. Initial target, we do have an important level at 107.77. I'm going to use that, and I'm going to use, of course, if you have enough time, if you can wait, I want you to wait for this. So these are the two recommendations for today, guys. Take a look at them, please, before we move on to our last instrument for the day, and that is going to be the pound. So before we do that, these are recommendations for the dollar yen for today. We sell if we reach 108.80 or if we break below 108.33. In both cases, we want to be short. We don't want to be long currently, unless a huge surprise happens and we break above 109.37. This is resistance here. For the sell at 108.80, the stop is going to be 109.57. Initial target is going to be 108.33. And this is, of course, the one that we are going to use when we place our order. We're not going to place 104 for today. This is a day trading session, not a trading session that is aiming to wait a month or two for these targets to be achieved. Or, of course, the second order that we're going to place is at 108.23 with a stop at 109, initial target at 107.77. This is the one that we are going to use today, and a long-term target of 104. Immediately to the pound. Let's see what can we do in the very short time we still have. Yes, let's go, let's go, let's go. Let's go. Okay, the pound. First of all, I'm gonna check the daily. All right. As you know, guys, we have been waiting for the support and resistance levels we have recently talked about. Not a lot of action happened this week. Not a lot of action, as you can see. It is not as boring as the euro, but it's still not really exciting. What is happening on this front is, it's not very boring. It's okay, but it's not the excitement that we are looking for. I think you agree with me that we do have something just below the 29 in these areas. I'm going to use the yesterday low as support. It's 28.91. So support is at 28.91. Let's see resistance. Resistance is, of course, provided by this falling trend line. I love this trend line, which is currently running around 60, but I want to see which retracement level, micro-term retracement level, is closest to this. Yes, it's the 86, of course, which is at 2961. So 2961. And I am going to build my trading strategy on these two levels. Anyone that gives way gives me a position. So if we break the support, of course, I want to be short. If we break the resistance, I want to be long. So sell at 28.81 with a stop at 29.71. 90 pips, a little more than I wanted, but it's okay. It's still within the reasonable range that we are willing to accept. Target number one for the sell. Target number two is definitely 27. It's a retracement level that we really care about. Target number one for target, I will really have to look at this chart, and I want to calculate retracements for this last part of the move to the upside. We have sell at 20.81. I want to see something that is calling me on this chart. Let's see that. Yes, that is very good. I'm going to show you what I'm talking about. The 78.6 retracement level, guys, is at 28.14. And as you can see, it is unbelievably close to this bottom here. And these bottoms here are not very far from it. So I'm going to use the 28.14 as my initial target. And I'm going to place this in red. Okay. Now what about the long position? We are going to buy if we break above the resistance. So buy at 29.71. Stop at 28.81. And now for the limits or the targets, target 1 and target 2. Target 2 or target 1, let's start with that. We have a target at 30.13, a previous stop at 30.13. I'm going to use that. But for target 2, we also have the target from yesterday at 30.77. Has to remember that. So these are my recommendations for the pound for now. And with this, guys, we come to the end of a fantastic week. I really hope that these recommendations that were issued today are going to add to the profit that we have made this week. We have started in a very strong way. Although we had a stop hit yesterday, we are still in profit in the overall result of the week. It was a very good week. And we are hoping for more, guys, when we come back on Monday. I really hope that we will be talking about more profit that we achieved later today. So keep your eyes on these recommendations, keep your fingers crossed, and I really hope that we will be adding to the profit that has been achieved this week a little bit more during this day. Today, the last 13 and a half hours of trading left in this week. I really hope they give us 50, 60, 70 pips, something like that, to end the week in the same way we have started it, in a very good way. So these are recommendations for the pound. Let me read them for you. We buy at 29.71 with a stop at 28.81. Our initial target, and that's the one we're going to use for the limit, 30.13. We do have 30.77 for you guys who like to achieve a little bit more profit than 3 pips, and these modest targets. For the sell, we have a sell at 28.81 with a stop at 29.71. Our initial target is going to be at 28.14. I don't recommend closing your short position before that, but there's a very interesting target at 27 that may be reached in case we start moving to the downside. With this, guys, I come to the end of a wonderful week with you. I am very thankful for everyone who has been watching this week, all of you guys. The last look at the comments before we say goodbye. Michael is saying, which broker do you recommend the most? Of course, QTimeFX, buddy. This is my account. Okay, this is my account, and it's live, as you can see, QTimeFX live, and this is my account, and I'm showing you even my account number. So, which is something I don't recommend you do. So without a doubt, this is where my account is, and QTimeFX is my favorite broker in the whole world, and the spreads are amazing. If you want to get in and out a lot of the times, when you have these tight spreads, you can get in and out 20 times during the day without worrying about the cost of getting in and getting out, the cost of trading. So that's why QTimeFX is a wonderful choice. And you know, they have the bonus, they have the zero commission. Everything you want to have is there at QTimeFX. So do not hesitate to contact us at fx_educast via Telegram to open your account today, guys. Thank you very much for QTimeFX for sponsoring this live stream. They are offering you guys, and this is of course in relation to the answer to Michael, QTimeFX is offering you a maximum leverage 500 to 1. They got the award for the lowest forex spread broker of 2018 by the ACIFMA. They are offering you ridiculous tight spreads, 0.4 on the euro and the dollar yen with zero commission. This is very important, guys. A lot of brokers tell you, well, yeah, we offer 0.4 on the euro, come trade with us. But we do have a commission of $7, $8, $9, sometimes $10. It depends on the broker. So that is, of course, not very good. You need to be trading with a broker like QTimeFX, the kind of broker who is offering you these fantastic trading conditions and not punishing you with commission. Right, guys? So in addition to these fantastic trading conditions, we are offering you the chance to get yourself a very generous bonus. Make a deposit of $300 and you will be eligible to get a $500 bonus. Make a deposit of $150 and you're going to get a bonus of 250 American green dollars. In both cases, the bonus is more than the deposit you'll be making. So what you are waiting for, guys? At fx_educast via Telegram. Of course, you need to go through this channel, through this contact, through this method of opening your account to get these promotional benefits, because FX Educast is behind these promotions. And We want you to contact us if you have any questions at all. If you need any help in opening the account, we will be there to help you with a big smile on our faces. And as Heather said, it's almost the weekend, people. So let's start partying. No, not yet. We still have a few hours in the market. And after that, the party will start and it will last for 48 hours of fun so we can recharge and come back to the market on Monday. Love you guys very much. Thank you very much for being here. Thank you to everyone who is watching this right now, who has been watching us all through this week, to everyone who has left a comment or request or whatever it is. Thank you very much. And I really want to see you all again on Monday. We'll be doing the same thing. On Monday, we're going to start talking about, of course, what happened in today's market, what happened to today's recommendations, and then we move on in our search for more exciting trading opportunities. Love you guys very much. I want to thank QTime FX, FX Educast, and you guys for making this week a wonderful week. And with that, I really want to wish you a fantastic weekend, fantastic trading for the rest of this day at the beginning. And then when the weekend starts, I wish you a fantastic, fantastic weekend. And see you on Monday, guys. I want to see you on Monday. I really hope we meet again on Monday. I want all of you to be here. I will give you the best analysis, the best trading opportunities on Monday. You don't want to miss that. So see you then. Love you very much, guys. Take care and bye-bye.